Good morning, Geekdom community, and welcome to another episode of the Geekdom Underground podcast, episode number 20. Wow, we're 20 deep.
Number 20.
Yeah, episode number 20.
Exciting.
And nothing but good vibes this morning. As always, it's your boy, JRG, hanging out with my buddy.
Good morning, everybody. My name is Philip Hernandez. I'm COO here at Geekdom, and I'm super excited for this morning's episode of Geekdom Underground, episode 20. That is, wow.
Yeah, landmark episode.
That is a landmark episode, and this is a very special episode. Today we have the co-founder of Generator Accelerator, Troy Vosseller, in the house.
Hey, good morning.
Thank you so much for being here with us.
I love it. And by the way, I didn't realize the underground name is true. We truly are in the basement level.
That's exactly right. Yeah.
It wasn't, superfluous.
What a great shout out for the Geekdom Underground podcast studio, located underground. We are in the basement level, which is pretty rad. I mean, that's how we named it, and we're pretty excited about it. But we do need to spice this place up.
That's what I was just saying. You need to get some paint on the walls. You need to get some photos.
We need to get more G's.
More G's. 3G, 4G.
Yeah.
5G.
This is the place for all the G's. But well, I feel like I'm not doing it enough justice just saying that you're the co-founder of Generator. You're here in San Antonio because we just had a huge announcement yesterday.
Big deal.
Big deal. So where'd you come from?
Sure. So I'm from Milwaukee, Wisconsin, and that's where I live now. And that's been the home, or the founding headquarters of Generator. So both Milwaukee and Madison, Wisconsin.
Wow. So Wisconsin, that's a far trek to come down. Have you been to San Antonio before?
Yeah, but this is my second time, and I got to say I absolutely love it.
Really? Awesome. So second time in San Antonio, you come to town, there's a press conference, packed house in the Geekdom Event Center. Mm-hmm. The mayor comes.
Yeah.
Judge Nelson Wolf, Graham Weston in the house, all the news outlets.
Front page of the paper.
Front page of the paper. The trees up at Travis Park. So many things happen when you came to town. Yeah.
Magical.
But no, that's awesome. This is something that we've been working on for a long time, this partnership. And I really want to get into all of that. But I think there's a lot of questions in the air after yesterday's press conference, because there's a lot of terms that are thrown around, like cybersecurity, which if you ask 5 people what is cybersecurity, you're going to get 5 different answers. Accelerators, incubation, all these different things. So let's demystify a little bit and clear the air. So Troy, if you could, why don't you let everybody know what is an accelerator?
Yeah, you bet. So I view the accelerator as a time-constrained cohort model, meaning there's a set number of startups. It's not unlimited number of startups. It's not like an open to the public thing. And it's time constrained. So in our case, it's a 12-week-long program, 3-month-long program, a 12-week-long program during which we have a competitive application process. So we recruit startups from all over the United States, even internationally. So those startups apply to our programs, including the cybersecurity program. Through that process, we'll narrow it down through a series of interviews, ultimately to 5 startups. So we'll select 5 startups. That'll comprise the cohort. We'll be investing $100,000 into each of those, which I think is another important distinction of an accelerator. So with an accelerator, we're actually investing cash in exchange for equity. And so therefore our incentives are very much aligned with that of the startup. So it's a little bit different than, the pure definition of an incubator, which would be more about kind of the space, their community, and the resources. Whereas on the accelerator front, we're definitely about all those things. We'll be co-located here at Geekdom, but then we're also having that investment component, which I think is the key kind of distinction or differentiator when it comes to an accelerator. So think of this as, again, a time-constrained model. It's a 12-week-long program. During that time, we're helping those 5 startups connect with mentors, customers, corporate partners, investors, basically whatever we think can help them grow customers, grow revenue, build more and better product, and then raise money to help them continue on that growth path.
That is awesome. 12 weeks, so that's a quarter.
Yeah.
And so 12 weeks, you come in, $100,000 invested. You have, if your company's in there, you have 4 other companies, up to 4 other companies that are in your cohort. Is there like do you have visibility into those other companies? Like, are you is there camaraderie within the cohorts?
Yeah, that's the goal. Absolutely. So,
Gotcha.
Companies can apply from all over. I mentioned even internationally, and certainly we hope that there's a number of great startups here in San Antonio that are also going to be applying and receiving investment. But within that cohort, one of the things we're looking for is kind of that mix. Do we think that this cohort is gonna, be collegial? Or do they have complementary strengths and weaknesses? And can we build that camaraderie? It's more art than science. Don't get me wrong, but at the end of the day, those companies will be working here at Geekdom. No matter where they come from, they're going to be relocating here for that 12-week program, and we hope to expose them to a fantastic experience here in San Antonio. So that's everything from the cultural and lifestyle experience that we hope that they enjoy, but then the business, the professional experience as well. And then it's really about kind of that Venn diagram where those two blend.
Yeah.
So if I'm working, in the trenches, let's call it, in the underground, with these with these 4 other startups, how are we helping each other from a business standpoint? Hey, you know this developer, I need help with this. So and so is one of your angel investors. I would love an introduction to her. So it's helping on those business things, but then it's also like, hey, we're all human. We're all going through this life together, and how do we make sure that we're having fun while doing that? And certainly if business is going well, I think it's perhaps easier to have fun. Right?
Yeah.
It smooths out some of the bumps. So our job is to help support that. Like let's have people build great companies here. Let's have people have great personal and professional experiences here.
I think that's really cool because, you build and not to sound cheesy, but like lifelong relationships through these accelerators and through these programs. You're going through together, the highs, the lows, you have someone to talk to and relate with. And then afterwards, it's just like, hey, companies may go separate ways or do their own thing, but it's like, hey, we went through that thing together.
Yeah.
And we can share that. I think that's really cool.
I think it also speaks to, one of our differentiators at Generator is this, what we call our concierge approach. So we only work with 5 startups at a time, which is fairly materially different than a lot of other accelerators. So, others that might do 10 or 12 at a time, 50 startups at a time, 300 plus startups at a time. And our model has always just been focused, again, on this concierge approach, 5 startups at a time. And I think the benefit of that from a camaraderie standpoint is you can't really hide. There's only 5 startups, and you're all going to be leaning on each other, supporting each other, cheering for each other. Versus if you had to double that size, quadruple that size, etc. I don't think you necessarily have the same level of camaraderie across the entire cohort. So in our experience, that has resulted in these lifelong friendships. And,
Sure.
And again, at the end of the day, we're here to do business. This is entrepreneurship, but to the extent we can foster some of those interpersonal relationships, that's a great second order outcome.
Yeah. Man, that is awesome. And it sounds intense. At Geekdom, we've been operating under like every quarter, we've been making really aggressive goals, specifically towards bringing this accelerator to San Antonio. So we're very familiar with what can get done in one quarter, and with what you're talking about, that's a lot of growth, and especially if you get that investment. I can see why it's called that, an accelerator. What does a day in the life look like for a founder or a when a company comes in, is it usually just one person as a founder, or do they have like co-founders and a team?
Sure. So the more the better is what we like to say. So, certainly we have invested in startups with just a solo founder, just one person. That's more of the exception than the norm, but we've done it. So we never want to have these absolute rules, like no solo co-founders. We've done it, and frankly, some of our biggest successes have been that way. But I'd say the average company is coming with between 2 and 3 people. So maybe those are co-founders, maybe that's CEO, those are other key employees. And so certainly some of it depends on life circumstances. If someone has a newborn baby, that's more difficult to relocate or to commit that type of time in a space here like Geekdom. So we let the founders sort that out. But at a minimum, we want key people here involved, engaged, and you'd asked about a day in the life, and I always want to preface that by saying startups, entrepreneurs, they get out what they put in. So we're going to provide the scaffolding, the structure, but we're not the CEO of your company. We're not a co-founder.
Yep.
We are a support system. We are going to help you set milestones. We are going to hold you accountable to those milestones. And to the extent you need access to resources, we all need access to more, everyone could use more resources. Whatever that word means to you, we're going to help grease the skids, make that more efficient, whether that's through introductions, whether that's through our own institutional knowledge, through our own network, through our extended network. So now we have, these nested networks. We're Generator, you're Geekdom. Hopefully this is, 1 + 1 = 3 as a result of these intertwined and nested networks. So you very much get out what you put in. I'll confess a dirty secret of not just us, but a lot of accelerators is this notion of external accountability. At the end of the day, I can't stress enough, we are not the CEO. Like, we're not in there typing code for you. We are not in there pitching your company in front of an investor. That being said, if you need to help hiring a new developer, we're going to help guide you on that. If you need introductions to investors, we're absolutely going to do that. That's a very specific part of the program. But it's more this notion of external accountability. So what does a day in the life look like? The program is roughly divided into 3 parts. The first third is what we call our mentor swarm. So over the course of a month, each of the startups is going to meet roughly 100 mentors sourced from our network, from the local San Antonio community, from the litany of subject matter experts as it relates to cybersecurity, from the Geekdom network, et cetera. So we're going to composite all these mentors together, and at a minimum, each of these startups are going to have the opportunity to connect, meet briefly one-on-one. So almost think of it as like a speed dating type experience, speed networking type experience between each of the 5 companies and 100 mentors. Our theory on that is, if we can connect you with as many smart, well-connected people as possible, serendipitous, positive outcomes will emerge from that. I can't be prescriptive. I can't say, hey, you're going to talk to Jane, and I know she's going to unlock this door. I can't be prescriptive like that. But what I can say is, if you run that random roulette wheel enough times, you're going to land on the right number. Or someone's going to say, you know what? My brother-in-law is the perfect person you need to talk to. And that might be the boom, aha moment. I would never know that. I don't know who your brother-in-law is, right? I could never guess that. So again, it's about creating optionality for yourself, et cetera. So that's step 1, mentor swarm.
Real quick, before you go into the next step, on that mentor swarm, where do those mentors come from?
Good question. All over. So, we kind of have a stable within our database, folks that have mentored Generator startups in the past. They're tagged accordingly in our database. We make each mentor swarm opportunity available to that full pool of mentors. And people opt into it. Mentors opt into it. So maybe they're they're on vacation, maybe they're not available right now, but we have enough kind of in the system where we fill that. So that's one bucket. Another bucket would be leaning on the Geekdom network. So who here within the Geekdom community is interested in mentoring these startups? And a mentor can be anyone from an entrepreneur, a community member, a subject matter expert, someone working in academia, someone working in private corporate life, someone working for government, perhaps one of the cybersecurity functions within the government, or an investor. So it could be any of these things.
Yeah.
So it's pretty broad. So the second bucket would be tapping the Geekdom network, and then 3 would be once we get the managing director hired and full time here, based in San Antonio, really relying on them to even extend that network further. So that'd be a mix of, hey, let's make sure we're getting everyone who wants to be involved in the local community. Let's get them involved. And then let's build concentric circles out from that with a particular eye toward cybersecurity or things adjacent to that we think could be helpful for these companies.
Yeah. And I mean, with such an exciting program, do you find that mentors want to be a part of this? Do they get compensated for it?
Sure. So absolutely. I think some of the best interactions that we have as organizers of an accelerator program, that the startups have as participants in a program, is this mentor swarm process. Mentors do not get paid. There's no compensation. All we ask for them is roughly 90 minutes of their time to efficiently connect. Some of this will be in person for local mentors, but it'll also have a hefty virtual component. The beauty of what we've all learned through COVID is, in some cases, people's willingness to connect across a further distance, because we offer virtual options, is greater. So we can actually connect with better mentors as a result of this kind of new normal that we live in. So I think that's a great byproduct, perhaps, of the pandemic. But mentors do not get compensated. It's fully on a pay it forward basis. So hey, they want to help the startup community, they want to help these entrepreneurs, and they're passionate about that, and they do it for free. Now, that being said, paths can diverge after that point. So all we're doing is saying, hey, we're going to set up this interaction. You mentor are going to meet 5 great startups. You startup are going to meet 100 great mentors. From there, it's really on both of you to push that relationship forward. If someone said they're going to make these 3 introductions, like, you should follow up and ask for those introductions, or get them the materials they need to make those introductions. Maybe someone's an angel investor or a VC. They want you to stay in touch. So for the next 3 months, you're going to keep them in touch, and maybe that leads to an investment. Others, hey, maybe it's not a fit at all. They don't know about your business or your subject area. That's okay too. So not all these are going to progress. But we've seen everything from out of the mentor swarm, people become formal advisors, people become independent board members, people become investors, people become customers, people become employees even. Sometimes these people are transitioning in and out of work, and they say, oh, I love what you're doing. I'm actually looking to advance my career, change my career, and I'd love to join your company in this mission. So we've seen all of those permutations play out. And again, I go back to this, the theory behind the mentor swarm is how can we connect as many smart, well-connected people as possible and get those serendipitous outcomes.
Yeah, that is awesome. I really love the collaborative spirit behind that. It speaks volumes to the mentors and the caliber and quality that they bring to the program. If they're coming and they're not coming for the money, they're coming because they want to pay it forward. Exactly. And that mentor-mentee relationship goes both ways. I think both sides get to learn from each other. So thank you for sharing that. So I had cut you off. I apologize. You had said it starts with that mentor swarm.
That's kind of the first third, mentor swarm. We then transition into what we call company building. So or company growth. And during that time, really throughout the whole program, but the emphasis here in the middle, we have bi-weekly team meetings. So twice a week, each of the 5 startups is meeting one-on-one for an hour with the managing director and program manager. And typically, let's say it's Tuesdays and Thursdays. Typically what the Tuesday meeting will look like is, we have a weekly update that we ask the companies to do. It's everything from kind of highlights, lowlights, KPIs, et cetera. And we're going to use that as the agenda for the meeting. So this is kind of the template that we've given them. We ask them to complete it weekly. We're roughly going to use that as the agenda for the meeting. And you can think of that as it's the startup kind of setting the agenda based on what they put in that update. So, what are areas that they think they need help with? Do they need specific introductions? What's a roadblock? And it's almost like an informal therapy. Like we're trying to find what are the bottlenecks? What are the roadblocks? How can we be helpful? And sometimes it's just talking through it. In other cases, it's more substantial, and it's like, how do we navigate that? Maybe the managing director or program manager can be helpful with the answer. Maybe it's someone in our generator or Geekdom networks that has the answer, or maybe we have to go outside of that and try to facilitate some introduction. So think of that as that's kind of the startups meeting, the entrepreneurs meeting. Second meeting of the week, let's call it Thursday. That tends to be more the generator meeting. So based on our pattern recognition of having done this over 9 years, we've invested in 154 startups. What are red flags or things that we think the startup needs to be focused on? And or maybe it's something like, hey, based on the Tuesday meeting, I really think you're kind of going down this rabbit hole too much, and we need to reorient you. The practice of entrepreneurship hasn't changed for a millennia. It's about creating a product or service, selling it, and going from there. So orienting people perhaps back onto sales instead of product. And I use that as an example just because it's pretty common in entrepreneurship. People tend to be product people, especially developers tend to be product people. Mm-hmm. And how do we push them out of kind of that core competency, that comfort zone, into what oftentimes is talking to customers and hoping to find that product market fit or getting closer to that product market fit. So second meeting of the week, think of that as kind of the generator meeting. We're going to set the agenda, set the pace a little bit more. Spurs throughout that, we'll have typically a weekly dinner or meal where we'll oftentimes bring in outside speakers. So someone to talk about either a topical area, in this case, maybe it's a nuanced area of cybersecurity. Maybe it's something more tactical, like how do you sell cybersecurity solutions to Fortune 500 companies, so topical areas. And then it's a meal. So you asked about camaraderie. So there's very much that aspect. And then group goal setting. So part of this is the external accountability. So as a group, we're going to set goals, with each of the 5 companies in front of each other. What are your goals for the following week? And we want to make sure they're smart goals. Let's make them quantifiable, et cetera. And hopefully that's an opportunity for people to share. So if I'm setting a goal that I need to, connect with CISOs at this CISO at this company, well, maybe someone else will raise their hand and say, I know who that is, and I can make that connection, right? Second part of that is what I call positive peer pressure. So if we're setting these goals as a group, there is some peer pressure that comes along with that, because the following week we're going to review your success in reaching those goals. Did you accomplish that? If not, what was the roadblock? How can we as a collective group help? So there is positive peer pressure, and hopefully on a week-to-week basis, people are substantially hitting their goals, but at the same time, we do want them to be somewhat of a stretch goal, and it can't be all green all the time. There's going to be some roadblocks. So positive peer pressure, external accountability. The last section of the program, the final third, is what we call the investor swarm. So again, we're perhaps
Lots of swarms
created with our names. Mentor swarm number one, investor swarm at the end. And what that is we schedule one-on-one pitch meetings between those 5 startups and all the investors in our network.
Oh, wow.
Now, some of these could be generalist investors. Some of them, will augment that with industry-specific investors, in this case, around cybersecurity, or have a propensity to invest into cybersecurity startups. And so we're going to schedule those, and I kind of call it like a disintermediated process. So I think a lot of accelerators put all their eggs in, proverbial eggs in one basket with a final demo day event. We do that. I'll get to that shortly. But because we only have 5 startups, kind of this, we have this ability to ask a VC, hey, can we have 90 minutes of your time? And you can efficiently review 5 great startups that have been competitively selected from a pool of hundreds of applicants. They've been working with us for at least 2 months. Can we have 90 minutes of your time to meet them? And we find that increases or elevates kind of the average amount of interest and investment that across a cohort sees. Because again, if we're putting all of our eggs in one basket with just one demo day, and that's when investors get to see these startups, well, what if you as an entrepreneur have a bad day? What if you have a bad pitch? What if just the vibe of the room, the groupthink, goes to just one company, not yours? Whereas if we can disintermediate that, and our goal is always to have 85 unique shots on goal, meaning get you in front of at least 85 different investors, that we kind of increase the average. So you can kind of smooth out some of those bumps or groupthink, or if you have a bad day, et cetera. So that's been a very successful approach. We really pride ourselves in that ability to source follow-on funding. And then we end the program with a demo day. We call it Premiere Night. So a big, community event, showcase style event. And really it's more of a celebration than anything. It's a chance for those 5 companies to get on stage and merchandise the progress and traction that they've made in the preceding 3 months. And hopefully it's an opportunity for some of them to get on stage and say, hey, you know what? I had a great experience in San Antonio. I had a great business experience. I had a great personal experience, from a lifestyle perspective. And now, I'm moving here, or I'm re-headquartering here, or we're opening a sales office, a developer office here in San Antonio. That'd be the type of goal that we would aspire for, and hopefully come Premiere Night, some startups will announce that.
In your other cities, do you see that happen? That they end up sticking around?
Absolutely. So we have some great examples. I can speak to 2 in Milwaukee recently, a company called Fiveable, which just raised a phenomenal kind of Series A round, a company called Brightsellers, which just raised another venture round. But both of them came from completely different parts of the country, came for Generator, for Accelerator, had a great experience. In some cases found kind of their lead investor for their seed round, and in other cases found team members, employees, customers, distribution channels, you name it, and end up re-headquartering, in this case to Milwaukee. And so we certainly hope to have great examples like that here in San Antonio as well. But what I want to say is we take a light touch to it. For us, it's about can we provide a great experience for them? Can we generate or provide a great experience for them during the accelerator, and have them see value from that? But then it's also on the community. So, my call to arms would be, can the community show that, like, hey, there's a business reason for you to be here? This customer, this mentor, this investor are buying from you. They're distributing your product. They're investing in your company. You're hiring great people here. Let's make the business case as a community to make a startup come here. It's not about charity. It's about business, and that's what we should.
It's a group effort.
Focus on.
Yeah, and so on that, like, you can only, like, to your point, you can only do so much. Generator can only do so much. The startup can only do so much. But there is an obligation on the city to step it up and be a place to not only work but also live and play. So is there any method to the madness of, like, picking which cities that Generator is going to occupy?
Yeah. So, first and foremost, I got to give credit to you, Charles, the whole Geekdom crew, because it's just been such a phenomenal welcome. I think the announcement that we had yesterday was the most enthusiasm, the most momentum, the biggest crowd that we've had for any sort of announcement like this. And I think that's credit to Geekdom. I think it's credit to the San Antonio community. But in terms of how we pick, so one, we always want to have a champion. So in this case, Geekdom, you've done the hard work. You've built the community that you have here. You have a phenomenal space. You have phenomenal programming, and we're just so fortunate to be able to plug into that. We're we're standing on the shoulders of giants with y'all, and we're not. And I don't say that lightly. You know, that's significantly different than coming into a community where there is none of this community, none of this infrastructure. So being able to have a champion like Geekdom to come in with and go hand in hand and ride your coattails is a tremendous wind in our sail. More broadly, how do we think about kind of expansion and growth? You know, I think today Generator is one of only 4 accelerators in the world with more than 3 locations. It's a pretty small group. And so we very much pride ourselves on this network approach. So within that, we focus on secondary markets. So I mentioned earlier, we started Generator in 2012 in both Madison and Milwaukee, Wisconsin. By no means the Silicon Valley, you wouldn't even call it Silicon Valley of the Midwest, right? So underserved markets, underserved from a startup perspective, underserved from a venture capital perspective. But I firmly believe that talent is distributed evenly. You know, when someone is born, the innate entrepreneurial talent, again, I think is distributed evenly geographically. It's not like only smart entrepreneurial people are born in the Bay Area. Like that's just simply not true. So knowing that, our mission is how can we be the best partner for a community? Again, community is very key. How can we be the best partner for a community to invest in its best and brightest? And for us, it's been focusing on these secondary markets. And so the unfortunate statistic is that 80% of all venture capital goes to just 3 states, California, New York, and Massachusetts, meaning the other 47 states, Texas included, are fighting for this 20% of the pie, only the remaining 20% of all venture capital. And I think some of that, it's not zero sum. So how can we tie these secondary markets together as a more cohesive community and realize that we can gain more from each other than we're perhaps cannibalizing from each other? Meaning, how can I be, if I'm an entrepreneur in San Antonio, I might be best served by a mentor in Indianapolis or an investor in Milwaukee or a corporate partner in Cincinnati. And via the Generator network, we can help make these connections happen and vice versa. There might be a resource, a person, a corporation, an institution, an investor here in San Antonio that at some point in the future, again, I don't know what, I can't be prescriptive on what that's going to be, but I'm sure that they will help other startups in the Generator network and some of these other secondary markets. And so again, I think it's more about how do we tie ourselves together as secondary markets to create more magnetism relative to Silicon Valley, New York, and Boston. I'll end, to give a more vivid analogy, think about grocery shopping. If I had a list of 25 items that I had to buy for groceries, but I had to go to 25 different stores to get them, the odds of me actually going to 25 different stores is pretty low.
Yeah.
Versus if I can just go to one store, a supermarket, a grocery store, and buy all 25 of those things, that's a pretty good outcome. And so where I'm bridging that is, if I'm a Silicon Valley VC or a New York VC, a Boston VC, and I'm looking for deals, the odds of me saying, first I'm going to go and look up the best startups in San Antonio, then I'm going to look up the best startups in Birmingham, Alabama, then I'm going to go the best startups in Minneapolis, Minnesota. The odds of them doing that are pretty low. But when we can tie all those things together and put them into what I call the Generator store, and at the Generator store, San Antonio has a shelf, Milwaukee has a shelf, Detroit has a shelf. Well, now we're making that experience much more efficient for the capital allocators, for VCs and other investors. So that's really our hope.
Yeah, man. It's great to hear you expand on the importance of community and network and the why behind the why behind the importance of community to Generator. When you and I met, and Charles and I were talking to you about accelerators, we were really asking questions. We were truly on a discovery call, just seeing are we even in the right place? Is this even what we really want? And the thing that stuck with me so much is how passionate you were about community. And because now you've seen, as we told you back on that call, that community is super important to us here at Geekdom, but now you've seen it and you've experienced it, you've felt it. Hopefully when you were here.
This is the biggest crowd we've had, so I'll take it.
Yeah.
Front page of the paper. I can't believe it.
Front page. I know.
I got to frame it.
Yeah. Yeah. Well, us too.
Yeah. For sure.
Yeah, that's awesome. So I have to ask you, 9 years that this has been going on. Why did you start this? What led to that?
Yeah, good question. So both myself and my business partner, we met, we were both lawyers. And so we met working on some mutual transactions together, both on the startup and the investor side. And so from that, I'd say we hit it off personally and professionally, and had a shared ground perspective that there just lacked a lot of efficiency for an entrepreneur to go from idea to incorporation to raising venture capital to growing that business, et cetera, so on and so forth. And it was frustrating because, in a lot of communities, there were a lot of kind of, let's call it legacy resources, but a lot of them were oriented around what I would call more traditional Main Street style businesses. High tech, high growth startups were a little bit different. Now, certainly there's like general business acumen that can bridge that gap, no doubt. I don't want to minimize that, but there weren't a whole lot of resources that I would say were very tailored to kind of this holistic approach, what I would call quarterbacking instead of pinballing. Meaning, in a lot of ecosystems, it's like, well, you can go here for this, and then you can go here for this, and then you can go here for this, and at the end of the day, you're kind of drowning that startup in directions. And so, how can we quarterback them a little bit more, give them a little bit more guidance and hand holding so that they can focus on what's most important, which is building that business, and others can support them with more tactical things like creating a C Corp or, registering if it's a regulated industry, like going through the regulatory pathway, et cetera. So again, we had this ground perspective that there lacked efficiency for nascent entrepreneurs to do that. In parallel, we had become admirers of what became known as the accelerator model at the time. So that really started with Paul Graham, and Y Combinator originated in the Boston area, now in Silicon Valley. But hands down, the granddaddy of accelerators, in my opinion, hands down the most successful, et cetera, no matter which way you cut it. And I like that approach. I said this notion of how can we take kind of the same amount of money, but rather than investing that bolus of same amount of cash in one startup, how do we spread it out over a cohort of startups and provide all these wraparound services? And do it in a cohort-based model, and do it in a time-constrained model, so that there is some urgency around that. In the same way that if a high schooler has a homework deadline, they're probably going to get it done before the deadline. But if they don't have a deadline, it just kind of languishes. So I loved everything that they were doing, and we said, hey, why don't we do that here being Wisconsin, which is where both me and my co-founder Joe Kurgis are based. And so we quit our jobs. We found a group of angel investors out of the Milwaukee area who really shared that same vision and passion. And that's when we started Generator in 2012. So at that time, annually, we would run programs in both Madison and Milwaukee. So, winter in Madison, spring program or summer program in Milwaukee, and vice versa. And that was the genesis of the idea. And so we started those two cities, and today we're in, with San Antonio, 29 different markets.
Wow. What did, you said you're still operating in Milwaukee and Madison. What was the startup ecosystem, like the startup landscape like in 2012 when you started, and then what does it look like today?
Yeah, it's a good question. I'd say it's evolved tremendously. And I think that's true of most communities, as it should be. It should evolve. So for one, I think there's a lot more resources available for what I would bucket as like venture backable, high tech, high growth startups, web enabled startups, et cetera. So there's more resources available. I think more than anything, though, there's community awareness around it. So I think that starts with how do you get the incumbents? And oftentimes those are like angel groups. So I'll use Madison as an example. There was a very successful angel community around biotech and life sciences. And certainly Generator's done some work in those areas. But a lot of what we were doing was web, software, et cetera. And I think, so there was a bit of a learning curve. There's education. But they were, to their credit, that, the angels in the community really came around to that, and they said, hey, our economy does need to diversify. Our angel portfolios need to diversify. And an accelerator was actually an efficient way to help do that, because we were kind of an additional screening layer, almost like a due diligence layer. And so we were fortunate for angels in the Madison community to invest into our fund and invest into our startups. And then I think that awareness spreads. There's some virality to it. Yep. And so now you have more funders, investors that are apt to invest in these new types of companies. You have resources at like the university level that are starting to train or network with or educate, young people kind of in these new high tech, high growth startup ways. And then the talent starts to diffuse. So I think the holy grail for every community, this rack space here in San Antonio is a great example where you have all this, like the shedding that comes from that, meaning like the talent that spins off of that, the capital, the wealth, the jobs, the institutional knowledge that stems from that is tremendous. And I think every community is fighting for that. I think in Madison and Milwaukee, we're still climbing that mountain. You know, we're waiting for that aha moment where again the wealth, jobs, talent, institutional knowledge can trickle down. But we continue to put more resources into it. It continues to evolve. But I also think there's a key takeaway that there's no magic bullet to this either, and there's a healthy amount of timing and luck. You know, we never know when that next unicorn or that next huge exit is going to happen.
Yeah.
But what we can control is what we're putting into that machine. You know, are we helping? Are we having more first time starts? You know, first fundings of companies, and I'm confident that if we continue to increase that number as a community, the rest will come out the back end.
Yeah, that's great. When you started, so when you look at now, like you just flew into San Antonio, had a great trip, were able to explore downtown a little bit. How does that feel? Like looking back at like 2012 when y'all had just started, is this what you thought that it was going to be back then, or did you think that it was going to stick there in Madison and Milwaukee?
I'm terrible at this because a lot of people ask me, well, what's your what's your five-year goal or aspiration, or where will you be in 5 years? Where will you be in 10 years? And I hate that question because if you asked me 5 years ago where we would be, I don't think I could have even guessed like 20% of it right in terms of what we're doing today, meaning the geographic expansion as embodied here in San Antonio, the programmatic expansion. You know, today we run accelerators even for artists and musicians. We run a skilling accelerator for and underemployed individuals. We never would have dreamed of doing that stuff 5 years ago. So I struggle to answer that question. What I will say is, I think if any organization or startup, as long as you have a North Star, like a strong mission, and again, I always go back to our mission, we want to be the best partner for a community to invest in its best and brightest. As long as you have opportunities that arise that fit within that mission, and you evaluate them accordingly in terms of, what's the opportunity cost of doing this, what's the financial, equation associated with this. As long as it fits that mission and you check the other boxes, I think that's fair game. You should be opportunistic in that regard. And I think we've very much lived that opportunistic growth strategy. But at the same time, I think it does tie back to the mission. It ties back to the strategy of investing in our communities. And I always go back to that grocery store analogy. You know, if we can add more shelves in our grocery store, we think that increases the sale of products on every other shelf, right? Just like a supermarket. Meaning, if we only had a store that sold real niche produce product or niche canned good product, that might not sell. But when you put it next to all these other things, like, well, now we're talking. Now people are buying these things as a basket of items. And so we very much believe in that network strategy. We believe in networks over parochialism, meaning I think there's a lot of communities that they become their ecosystem as it relates to startups or entrepreneurship becomes a pond unto itself. And meaning they're like, oh, well, we have, these handful of investors, handful of VCs, universities, but they kind of lack the connectivity out to other communities, to other sources of capital. And we're really trying to kind of break those parochial chains and say, hey, it's okay if a startup raises money from LA, or if a startup has customers in Indianapolis. In fact, we want to facilitate that.
Yeah. When you, so with this experience and having this level of visibility into so many startups, it's got to be like an emotional roller coaster. We hear about, oftentimes it's publicized whenever there's a positive milestone hit, or somebody gets funding or something like that. But the things that happen behind closed doors, the challenges, it's not always sunshine and rainbows.
Yeah.
So what, in your experience, have you identified that like maybe an oversight that startups might have going into a program like Generator?
Interesting. I think you're absolutely correct. The big flashy stories, take over. I call it TechCrunch-itis, like if I had to call it a disease. So, and founders fall into this, where I fall into it, where you read all these headlines. This company raises 10 million, this company raises 30 million, they, $100 million valuation, $1 billion valuation. You hear all these things, and you presume that like because you exist, like that's your path.
Yeah.
And, I don't want to call it entitlement, but there's this belief that like everyone gets that. And again, sitting on my side of the table, having done this for 9 years, working with more than 700 startups, it's not the case. It's the outlier more than the norm. And so part of our job is help helping to ground startups in that. The more we can do that empirically, like by showing them data or just anecdotally, I think the better. Where I'll come at it from like a couple tactical angles. I think sometimes we're criticized being, oh, these companies are trying to raise too much. If you were in our meetings, I can't stress enough how much we advise startups to raise less. And a lot of that has to do with, if you raise less, and perhaps that does mean the valuation's a little bit lower. Well, now you're not what I call price to perfection. I think too many startups and VCs fall into this too, where their seed round, their Series A round is what I call price to perfection, meaning it's basically the top of the market that can bear. That might be okay if you hit all your milestones. If you execute perfectly, hit all your growth milestones, that could be okay. The problem is if you don't do that, and the odds are probably in your favor that you don't execute perfectly.
It's a lot of pressure.
It's a lot of pressure.
Yeah.
If you don't execute perfectly, well, now by raising less money, perhaps at a slightly lower valuation, you have room to always have a markup. You can always go back to the capital markets and have some sort of markup, because at least you're going to have some growth, presumably. It might not be that, that 3x year over year or greater number, but now you always have kind of a release valve to go back and raise more capital. If you price to perfection, however, and you don't hit those milestones, well, now you might be looking at a flat round, a down round, and increasingly investors might not even look at it. They might not even want to deal with it. They might just say, "Hey, we have so many other opportunities surrounding us. We're gonna go to them rather than kind of clean this other old one up." And so again, I think entrepreneurs make this mistake of sometimes asking for too much money, for pushing valuations perhaps too high. And again, I'm not putting all the onus on the startup here. Investors are very guilty of kind of playing into this as well, I think, at times. That being said, if a startup can raise more money from investors that they want to work with at a great valuation, they should absolutely do it. But perhaps what my advice is, I think there are other ways to create more optionality for you that perhaps might be in the long-term best interest of your startup.
Yeah, that's great. Because it's what's funny, especially as we've been working on this and having this accelerator conversation over the last few months, I've realized how little a lot of people know about accelerators, especially when we're working with Mary, and she's like, "How do I talk to the press about what an accelerator is?" But what's funny too is even startups, startup founders may not know, like, am I set up for this? Am I the right person for this? Right. So thanks for speaking on that. To kind of go off a little bit, what drives you? What do you do outside of work?
Good question. I think part of it is I love what I do, right? I think I'm speaking for my co-founder Joe, for our team. We wake up in the morning and go to bed at night thinking, how can we help more entrepreneurs? How can we help more entrepreneurs grow and succeed? And for us, the best feeling is a startup that perhaps you recruited to apply to Generator, that went through Generator and you worked kind of hand in hand with them, that you helped either directly or indirectly raise the next round of financing, and then they're off, and then they continue to grow, and you see their company grow, you see their headcount grow in terms of employees, and hopefully they have a good outcome. Meaning hopefully they're creating a lot of wealth and jobs, and then hopefully they can give back to the community in that way. That trickle down effect. So there's no better feeling than that. And again, it's probably the biggest dopamine release to go from recruiting a startup to having them go through the program, investing in them, and then seeing them have success on the back end. No better feeling. In terms of what I do outside, I'm a new dad, so we have a new 4-month-old baby, a 2-year-old baby.
Congrats.
So I love playing with them, and frankly, I think that's been one of the silver linings of COVID is, I'm traveling less. I'm obviously here now, but traveling less than I had been before, just because I think as a society we're figuring out ways to do stuff virtually, which is a good thing.
Yeah.
I also think, I'll take a tangent here, I also think that's a good thing for secondary markets, meaning you don't have to fly to Silicon Valley. You don't have to move your company to New York. You don't have, you can stay here in San Antonio. You can stay in Milwaukee, and you can build a great company and have the connectivity and resources and capital that you need. So I think again, that's a silver lining. And I personally enjoyed it as a parent, being able to be a little bit more present at home with my kids. I'll give you one funny thing that I really got into during the pandemic. People get into like baking bread and all this stuff. I really got into my lawn.
Oh, did you?
My wife would make fun of me. I watched YouTube videos. I would learn about, fertilizing and aerating and all this fun stuff. So I don't get me wrong, I don't have a big lawn. I have a tiny little postage stamp lawn, but that was something that I got that I enjoyed. My weekend lawn mowing and lawn care stuff.
So like you have like really nice grass. You have like really nice grass, or you have like
that's
decorations or
the best grass.
Oh yeah,
Even, soft, plush.
Your own little slice of heaven right there.
yeah. The neighbors hate
That's
you.
what I love.
Yeah. How do the neighbors feel?
I think it steps everyone's game up, right?
Yeah.
They got to compete. They gotta get that lawn going.
Yeah, the property line's clearly visible.
Yeah, right.
Yours is perfect and pristine.
It's just such a contrast.
Yeah.
No, that's great.
So that's my version of baking bread.
Yeah. Well, thank you for sharing. When you go back, and when you go to other cities that Generator occupies, what are you going to tell them about San Antonio?
I loved it. I texted my business partner. I texted my wife. I said, man, this is so much cooler than anything I've ever heard of. I've heard of the Riverwalk and stuff, but Eddie from Generator and I, we walked it last night, and the Christmas lights hanging from the trees, and people mingling about and walking around. It's amazing. Like, what an amazing piece of infrastructure, an amazing kind of highlight to the city, and so I loved it. We got to go to some awesome restaurants during my time here, and I think it's those things, meaning it's outside of business, that make people want to come to a city or stay in a city. Yeah, I was mentioning last night at dinner, when we think about economic development, if you're a software developer, a 6-figure job today is kind of the commodity.
Yeah,
like you can go any city and find that job. So then it becomes, what are reasons outside of the job, completely outside of the job, lifestyle, restaurants, nightlife, culture, art, music, etc., whatever you're into. It's those factors that I think make people want to relocate or stay where they are. And so my experience here in San Antonio has been phenomenal. I stayed in an awesome hotel right on the Riverwalk. This Riverwalk, I'm stressing it. You guys live here, probably like, oh yeah, more Riverwalk.
No, I think it's awesome.
Yeah, I love it. And I think that's the type of stuff you got to double down on. And I'm excited to come back. I'm excited to bring more of my team members here. And I'm excited for the 5 startups that we'll be investing in for the first cohort.
Oh, that's great. Well, I only have a couple more for you, but one of them that I went on the website, and now it's live. Everybody can go check it out. It's generator.com/cybersecurity.
Yes.
And the A in Generator is replaced with an 8.
The number 8.
Is there significance with that?
A little bit. So one of our original co-founders and investors did a lot of business in China, and 8 is the lucky number in Chinese culture, kind of like what 7 may be in American culture, and so that was part of the inclusion of the 8.
That's awesome. Yeah, awesome.
Fun fact.
Yeah, that is a fun fact. Well, I went to the site, super informational. That's where also all of our listeners, y'all can go check it out and get information on the program. There's an apply here button.
Yes.
So I did that, and it's a lengthy application.
Yeah.
So there's a lot of things I'm going to miss here, but you need your pitch deck, and there's other areas where you can put other documents and things. What does a startup need to be successful starting out in one of these things?
Yeah. So I'll start by saying we're actually recruiting for 2 things. So our first cohort of startups. So the application is live at generator.com/cybersecurity. The application deadline is in May. So we're actively recruiting those entrepreneurs and startups, and we're broadly defining cybersecurity. So we don't want to have a very specific definition. If you're still curious, we do list a whole bunch of prompts and kind of more jargony words that you can see if you fall into one of those buckets. But we're trying to be very broad in what we mean by cybersecurity. And the application deadline is in May. We're also recruiting for a managing director. So we're hiring the Generator employee that will be based here in San Antonio running this program. So for anyone out there that has a passion for entrepreneurship, passion for startups, and either expertise or just an interest in cybersecurity, because at the end of the day, we're also going to be relying on the litany of experts in cybersecurity here already, but someone that really wants to be that startup coach, cheerleader, champion, as managing director, we're recruiting for that as well. And you can find links on that website. You can go to our generator.com/careers page as well to learn about that managing director page. In terms of, from a startup perspective, what we're looking for when they apply, really it's about the people. So to tell us about you and your team. you know, what kind of motivates you? What are your past experiences? Basically, get us comfortable or excited to think that you are formidable, that you are someone who can execute on this vision. Perhaps you have a unique point of view of the problem. Perhaps tied to that, you have a unique point of view on how to solve that problem. So, you know, give us that full picture, that full context on why you are the person to do this, and why would we want to bet on you, and why are you going to be the winner here? Next would be, is this a large and growing market? You know, you might have 100% of a super niche market, but that just never, the economics of that would never work out from a venture capital perspective. But don't self-defeat. You know, you should still apply, and we'll sort that out. That's our job to sort out.
Yeah.
But do you have a large and growing market? So another way to think about that is, are you venture backable? And, you know, roughly you could say, you know, assuming things go well and you execute properly, you know, could this have $100 million plus outcome from a liquidity or exit standpoint? And then, you know, lastly, I always talk about traction, and I like to frame that as prove to us that the dog will eat the dog food. So all things being equal, team, market, et cetera, you know, if I have one company that already has X number of customers, X amount of revenue versus one without any of that, I'm going to tip my hand to the former, the one that has that traction. So again, I'm willing to, having done this for 9 years, I'm willing to believe that almost every idea could be good. If you can execute on it properly, almost any idea could be good. So then it's a matter of proving that. Prove that the dog will eat the dog food. And the more you can brag about your traction, the better. I think sometimes entrepreneurs are bashful. They'll say like, oh, I only have, you know, $1,000 of revenue. The reality is, if you have $1 revenue, empirically, amongst all new businesses, you probably have more than 95% of new startups in terms of revenue. So don't be ashamed of that, because even a giant sequoia starts from a seed, right? And I think too often entrepreneurs will say like, oh, I'm too shy, or I don't want to share about like I think my revenue or my traction's too little. Please brag about that. Show, because it's at least some indication that the dog will eat the dog food. And that's an encapsulation of your ability to execute, the market that you're selling into, your ability to sell, your ability to build a product. It's all those things when you have some sales.
Very well put. Thank you for that. This is my last question I have for you. Do you have any advice for the founder that has a cybersecurity startup right now that's listening and feels like they check all the boxes, but is hesitant to hit that apply button?
Yeah, good question.
What advice do you have for them?
One, I'm gonna self-defeat here a little bit, or argue against myself. I think entrepreneurs owe it to themselves to create optionality, and that would be everything from grow a great business that becomes cash flow positive and you control your own destiny, and maybe you don't have to ever raise venture capital. Good for you. That might be your path. Pitch all the angel investors and VCs that you can find and see if you get investment. You should do all of that. I'm also biased because I own and run an accelerator. I think accelerators are a great mechanism, you know, to achieve your growth. And I think startups should be applying to as many accelerators as possible. So again, I'm arguing against myself here a little bit, but I think you as a startup CEO owe it to yourself to create one of your core jobs is creating optionality for you and your business. And I think you should apply to as many accelerators as possible and see where it goes. Let the worst thing be that you get accepted to a dozen great accelerators and you turn them all down because you have a great offer from a VC. Let that be the worst thing, right? Yeah. What I don't want to see happen is a startup that overthinks about it, does a lot of research, which is good. You should do research on these, but they only apply to one accelerator, and let's say they don't get in. Well, now you kind of got to restart that process, and you got to wait for the next application deadline, and then you're applying to the next one. I think you owe it to yourself to take a shotgun approach, to apply to many different accelerators, to pitch to many different angels, pitch to many different VCs, all while trying to grow your business. I acknowledge I'm asking for more than 100% output, but that's the name of the game of entrepreneurship. So first, if you're thinking about it at all, I think you owe it to yourself to create optionality. You should apply to Generator Cybersecurity. You should also apply to many other accelerators, and let's see where the chips land. Let's see where things shake out. I think that'd be my best advice to a startup.
Right on. Yeah, thank you. Well, this has been awesome, Troy. I really appreciate you, coming to our city. Welcome to San Antonio. I appreciate you spending all the time with us and sharing a little bit of your story, where Generator came from. And with that, Mr. JRG, if you would, please take us home, sir.
Absolutely.
Love it.
Thank you for your time, Troy. How do people find out more about what Generator's doing?
You bet. So visit our website, generator.com. That's GENER, the number 8, TOR.com. generator.com/cybersecurity. If you're a startup, please apply before that May deadline. If you're interested in the managing director role, please apply for that as well.
I love it. I love it. Well, thank you everybody for tuning in. Thanks for hanging out with us this morning, and we'll see you next week. Take it easy, y'all.
Bye, everybody.
See y'all. Thank you.